Aloha, YouTube. How is everybody doing today? My name is David Jansen. Today is August 21st, 2020. It is Friday. Hope you guys have somewhat of a nice weekend plan for yourself. Maybe it's sunny there. I know on the U.S. mainland, I'm in Hawaii. Fall is probably getting ready to jump on your front door here, so I do miss the fall, I'm not going to lie. The leaves changing, the crisper type weather. I do like jacket weather, so spring and fall are kind of my more favorite seasons. The weather isn't too hot, isn't too cold. So for those of you on, in the Northeast, in northern parts of the U.S., or even in other countries where you get fall and winter, be safe. Flu season will be upon us really soon here. So hopefully everything with this virus will be under control before anything major happens again. But we are looking at my M1 Finance portfolio. Also, I want to give a big mahalo to everybody who has subscribed to the channel already. Thank you very much. It really helps support the channel. And if you haven't, please go ahead and subscribe. It will help support the channel. It means a lot to me as well. And you'll also find some links in the description if you want to get some free stocks with Doe Finance. I got a free stock when I signed up with them. Robinhood, I got a free stock when I signed up with them. And when I signed up and deposited $100 with webull, I got 2 free stocks. But webull will still give you just 1 free one when you initially first sign up. So check the links in the description there. So looking all time, you can see I have 2 accounts with M1 Finance here. This is the individual portion. I'm at $4,700, up 19%, $358 and some change all time. You can see my blue chip slice here. M1 Finance has this as a pie. You can select what you want to put in your pie. You can name these slices whatever you want. So I went with blue chips here, as I was still new when I started this. I started this July 1st, 2019, and really kind of the only stock lingo that I knew was blue chips. And that came from when I had the Stash app. But when Stash started charging fees or increased their fees, it was one or the other or both, I decided to look for a brokerage that didn't charge any fees. So I ended up finding M1 Finance, I ended up finding Robinhood. So I have a Robinhood account as well too. So check out my videos for Robinhood as well. I don't think I'm going to do a Robinhood video today because I've got some other things that I need to do. I have to go to the post office. And typically I do my grocery shopping on Friday too, and it's already almost noon here in Hawaii. So, I don't want to waste the whole day. Not that you are a waste, not that sharing this information to you guys is a waste, but, you got to, manage your time effectively and efficiently. So my blue chip's down a little bit all time. Real estate investment trust is down significantly mainly just because of realty income here. These other ones, I believe, are good future-proof, recession-proof companies, as they are data centers, cell phones, cloud storage, stuff like that. So, but realty income is still solid. I mean, they brought in, and they did in this last earnings report. I talked about this in a previous video, so I'm not going to say it exactly right now. Check out that other video. But basically, they delayed some of their, I don't want to say accounting principles or whatever, but I think they just refinanced some of their debt at lower interest rates so that that doesn't actually show up till the end of 2021 and beyond. So, and I'm not an accountant, I'm not a financial advisor, I'm not an economist either. So look up this information yourself to see. But Realty Income is still a solid company, and they still pay you every single month. They've been increasing their payment for over 25 years. I expect them to keep doing so for the next 25 years, just because the companies who rent their buildings from them are solid companies. AMC has struggled, yes. LA Fitness has struggled, yes. But Walgreens, 7-Eleven, some of the other gas stations, they have some Walmarts, they have some Home Depots, all of those have still been doing really, really well. And Walmart just did their earnings report, knocked it out of the park. Home Depot just did their earnings report as well, knocked it out of the park. So by and large, they're well diversified enough to where they were still able to collect, I believe it was like 90% of their rent at the end of July, which is an amazing thing to do in a recession, especially one where you have a recession where some of your tenants had to close and not collect any money. But they still took a significant dip. I would like to buy more into them. Right now I'm sitting at 5 shares at $66.74, and it's trading at $61. So I would like to buy more of them, but kind of my strategy on buying is if the ex-dividend date is coming up, or if the company drops significantly for my average price to go down enough, then that's how I kind of do my buy strategy. So, because right now what I'm doing is I'm just building out this portfolio. I feel at almost 45 years old that I needed to be really well diversified. That's why between all of my accounts, I have 65 holdings. I know it's a lot. I feel like it's a lot as well too. I did do a sell from Robinhood in a video yesterday, and I took profits from another company out of my Robinhood portfolio yesterday too. And I have also taken profits from Tesla as well, which I own here in M1 Finance. But the majority of my companies, probably 95% of them, pay a dividend and have been increasing their dividend for some time. I want to say like maybe a minimum of 7 years, just because I know this real estate investment trust is still new, Equinix, and they've only been increasing it for like 7 or 8 years. So, but the majority of them is 25 years plus, especially in my Roth IRA. So I get paid quarterly and monthly by all of my holdings in my M1 Finance, with the exception of Tesla, which Tesla still gives me huge capital gains. As I originally had bought in at almost $100 fractional shares. That's why I love M1 Finance. That's why I like Robinhood, because you get fractional shares. So, which means you can buy companies. You don't have to pay the full price for it. So right now, if you wanted to invest in Tesla, if you sign up with Robinhood or M1 Finance, you can do it with $5, $10, $25, because I don't know a lot of people that have $2,000 to drop on one share. And I didn't have $400 at the time to drop on one share when it was trading at that. So I ended up putting like $85 or $86 into it. So, but I still got the capital gains. See, it's up 394% and $284, and I took some profit from that. So that's kind of my strategy. So I had a lot of companies about to pay for July, August, and September. So I went ahead and bought more shares of them instead of increasing my holdout in realty income. And I also didn't want it to get too high. Like right now, if you look at my AT&T, I'm almost at 10 shares. I don't have anything else that's almost to 10 shares in this. Verizon is the next closest one at 6, and then realty income is at 5. So, I really need to build up some of the other positions before I'm overweight in realty income and AT&T. And AT&T, it's hard not to buy them at $29 a share, but you don't want to be too, for my situation personally, I don't want to be too top heavy in one particular company. Even if it's Tesla and it's gaining $100 a day, or Amazon who's gaining $50, $100 a day, I still rather not be super, super top heavy, because you never know what's going to happen. Nobody can predict the stock market. Nobody really knows what's going on when it comes to all of a sudden so-and-so got fired for embezzlement. Look at all the companies already. The founder of Uber was removed, along with some of his other people underneath him. GE has struggled for a long, long time now here. The airlines are struggling big time. Yes, people aren't taking flights, but they did a lot of share buybacks. Maybe not a whole lot, but they did enough. And they have, especially American Airlines, significant amount of debt that has really hurt them. So you never know what's going to happen. So I try not to be too heavy on certain. I'm trying to be as diversified and as spread out as possible, so that if something does happen to any one of my 65 holdings, not here in M1 Finance, but all my account 65 holdings, I know it's a lot, I won't suffer too much. So, and my tech, I feel like my tech is pretty good. IBM pays a good dividend. All these pay good dividends with the exception of NVIDIA and MasterCard. Both of them is penny dividends, but both give me good capital gains. And I have a video, 2 or 3 videos on Intel you might want to check out on why I'm still bullish on them. And quickly, well, check out my other videos. You'll hear my opinion and my skepticism about the banks. But my finance slice has 2 banks that I own in there. And I have one other bank that I own in my webull account. So, which that one I really like. So check out the video on webull. But just so that we're not going into, too long a time on these videos, moving to my Roth IRA. Oh, and by the way, between the 2 of these, I'm almost at $11,000. I find that to be really good for me. I started this Roth IRA September 9th of last year, so not even a year yet. And I am sitting over $6,000. I'm up 21% and over $500. And not all of this is for the $6,000 contribution. Looking at my funding history, $1,900 of it was deposited for last year's contribution, because Roth IRAs, you're only allowed to top out at $6,000 a year. But the tax benefits for when you withdraw, you don't pay any taxes. So that's why, in my opinion, you should have a Roth IRA. So for this year, I'm going to hit the $6,000 hopefully. Right now I'm at a little over $3,600. So this whole thing isn't necessarily for 2020 contribution. So, and I have unless they extend the date again till April of next year to max out for the $6,000 for my Roth IRA. So all time, most of these are doing really well for me. This is majority ETFs just because of the diversification. Tech is my leader. Apple and Microsoft, I love them. This ETF, I always keep saying I'm going to do a video on this ETF and then something else comes up and I don't, but I really like that Vanguard Information Technology ETF. And my blue chips, I love these blue chip companies. They have been doing amazing for me. I haven't added anything to Abbott Laboratories yet, but I would like them around $95, I think, even though they still pay a good dividend and I should just buy it anyway. Procter & Gamble, Next Era Energy, McDonald's, Colgate-Palmolive, Air Products and Chemicals. These are just solid dividend-paying companies of 30 years, 40 years, 50 years. I really, really like them a lot. And for the day, you can see for my Roth IRA, up $40. And my blue chips, everything pretty much in the green, with the exception of these 2. And this is an international ETF. It's a high dividend yield ETF. I feel that you should have international exposure in your portfolio. So I have this ETF and then this other one here for the Pacific. I feel more comfortable with Australian and Japanese companies. So this ETF has a lot of those, and Korean companies. Since how I'm here in Hawaii, a lot of those businesses come through here and they buy a lot of real estate here, as far as condos and stuff and rental offices, and they do restaurants, and they just buy like 5-6 condo buildings and put them on Airbnb. So I feel like I have a better understanding of the Pacific side, so I went with this. I probably should have just kept this VYMI, but I don't know. I mean, Australia has some good companies. So does Japan and Samsung. Samsung's in Korea, not Japan. So my bonds, I really haven't done much to, but I probably will start contributing to them next year if the stock market continues to go up, because then the prices on everything else will be up significantly. And this is my S&P 500, and the Dow Jones Industrial Average pays me every single month. It was at a record today, and the S&P 500 ended as a record as well, too. So in my opinion, get yourself a nice monthly paying dividend ETF for your portfolio and have the S&P 500. And like I mentioned in a previous video, you're 30 and under. By the time you're 65, 70, you're a millionaire. So I will have a hard time getting to $1 million, but I'm going to try and see what happens. So that is my accounts for this portfolio. Subscribe to the channel. I appreciate it. Mahalo, aloha, be safe and healthy out there, everybody. Have a great weekend.